the biggest bets, the biggest and strongest outcomes, they're incredibly risky, right? And you need to be accepting of failure to be able to do something genuinely game-changing. Deep tech is very much having its moment again. AI, energy transition, space tech, defense, health. Something that's super important for deep tech founders is...
Hi, I'm Tom Guinness and welcome to the Raising Your podcast. Joining us today is Rowan Bird, a deep tech investor at BGF, a major UK growth fund with over £5 billion deployed into over 650 portfolio companies. You don't want to miss this.
I'm Rowan Bird. I'm an investor at BGF, focused on early stage deep tech investing. And I suppose it's important because there's a lot of very interesting, exciting technologies developed here in the UK. And Ireland, and hopefully we play a small but not inconsequential role in helping them commercialise some fascinating technologies and hopefully scaling into global businesses.
So what's your story? How did you become a deep tech investor with BGF?
I suppose I've always had a sort of fascination with how technologies are sort of applied to basically solving and addressing kind of big, important challenges. But I sort of took a bit of a roundabout route into deep tech investing. So, as you know, started off my career in investment banking, sort of cut my teeth there, which was kind of super interesting, getting under the hood a little bit on kind of how big corporates think about strategy, kind of evolution, acquiring new technologies, which was, interesting, but definitely wanted to be closer to the challenge, closer to the sort of the exciting parts of things, and moved across to BGF in 2019 and have been investing in early stage deep tech businesses since then.
So what's your goal with investing with BGF? What do you want to achieve?
I suppose goal is really hoping to back globally relevant companies coming out of the UK, leveraging the really exciting, genuinely world leading research that we have here, and playing a very small role in hoping to help them scale that into globally relevant businesses.
Right, so if we go a little deeper on that topic, what type of businesses do you invest in and how do you invest in them?
Yeah, so maybe helpful to do a bit of context on BGF. So BGF, we're an Evergreen fund that was set up in 2011 with a little over £2 billion of capital provided by our shareholders. Since then, we've invested in over 600 businesses, deployed about £4.6 billion over that time. We've exited about 280 businesses. So we're a large organisation. Most of that is into our own flavour of growth investing. So similar to mid-market private equity style investing, 10 to 30 million pound investments into mature businesses, kind of looking for capital for that next stage of the journey. And that, as I say, is the majority of what BGF does. I work in what is effectively our venture capital arm. And there we focus on IP-rich, know-how heavy businesses across two key areas. So one is life sciences, and the other one is deep tech. So my focus is on the deep tech side. And really we invest across sort of five main areas, relatively broad, but things across sort of semiconductors and photonics, advanced materials, AI, energy storage and management, and energy and resource efficiency. Those are sort of our five main areas.
Right, and so AI, is that an application layer, infrastructure layer? What is it?
So much more on the infrastructure layer side of things. So looking at, I suppose you can kind of think of it on sort of the two ends of it from a sort of kind of physical AI piece, I guess. It's the sort of physical infrastructure, looking at a lot around that space, and then sort of the physical deployment of it. So sort of, I guess, spans a lot of the sort of industrial process efficiency type stuff that we look at, sort of automation, embedding kind of AI at the edge within sort of manufacturing and that type of stuff as well.
Right, so things like AI-defined robotics is front of mind.
Yeah, definitely an interesting space. Lots of interesting stuff happening in the UK and across Europe broadly. So definitely an area that we've got an eye on.
Right, and in the life sciences side, what kind of subsectors does the team focus on?
Yeah, so the team focuses on things like drug discovery, drug development, diagnostics, advanced tooling.
Right. And I know that BGF is almost in-market private equity style investing at its core. You mentioned, 10 million pound plus tickets. In the venture arm, is that the same ticket size, or is it kind of be smaller?
Yeah, so our strategy is really to invest kind of from seed to Series B as an initial check. We mainly focus around Series A, and our approach is to lead or co-lead rounds with a 3 to 10 million pound check when we first get involved, and then really leveraging the benefits of our Evergreen structure and kind of looking to deploy more capital throughout the journey. So I think we've got up to about 35, 40 million pounds into our sort of longer hold period investments at the moment.
Right, and that's a mix of, a small initial ticket and then adding on an additional rounds.
Yeah, exactly. Yeah, so so I think kind of just thinking maybe biggest single ticket we've deployed into one of our early stage businesses is probably about 20 million in a sort of late stage round just prior to acquisition, which was a good result.
So if we take a step back and think about, investment philosophies, how would you describe your investment philosophy without using cliches?
Yeah, so I suppose the way that we approach it is, so we're fundamentally looking to be a supportive partner, right? And BGF was set up originally to be a supportive partner to UK and Ireland-based SMEs, and we're really looking to take that ethos into the sort of early stage end of the market as well. And we think we're really well placed to do that with the funding structure. So that means kind of fundamentally backing businesses with very high potential, very high ambition, looking to sort of be proactive, roll our sleeves up, and provide access to the benefits that sort of BGF offers across the the amount of deals that we've done, the experience that we've built up, and the sort of the platform that we've built over the years as well. So I suppose in a nutshell, it's sort of being a long-term flexible partner, really.
It's always interesting having the Evergreen fund, and then also the folks like 𝐲𝐿 are doing it.
Yeah, and those models are great. I think the piece that really separates us is that kind of with our Evergreen fund structure, the way that it's been set up is we're now self-funding, right? So we invest about 500 million pounds a year, and that is pretty much serviced by the proceeds of previously successful investments. So as an investor, my time is entirely dedicated to sourcing, it's assessing deals, and fundamentally, most importantly, kind of helping the portfolio that we've got. That's where my focus is. I don't have to worry about the sort of the fundraising side of things at the moment, which is really nice.
So when we talk about sourcing, where do you think the biggest investment opportunities are right now?
Yeah, I'd say sort of two big ones that I think are quite exciting right now. So one of them is probably relatively obvious, is around sort of compute infrastructure, right? We're in boom times for AI, for compute, and I think anything that sort of plays into that is really interesting, particularly as around that infrastructure layer, more efficient compute, running data centers, cooling, energy, all that sort of stuff, and then also fundamentally looking at where that next bottleneck is, whether that's, as I say, the efficient compute, or whether that's kind of looking at memory or whatever it is. I think there's a really long, kind of sequence of interesting opportunities that are going to arise through that. The other one would be around advanced materials, precision manufacturing, focusing on things like modularity, nearshoring, circularity. These are sort of big questions which obviously have huge, climate angles, but also fundamentally kind of geopolitical ones as well.
Right. And so when we think about the geopolitical side of things, aware that the UK has launched 𝐸𝐴. Have you been interacting with them? And, what exactly does that mean for UK tech, especially deep tech?
Yeah, I think it's a really great signal that, the government is taking the sort of the challenge, but also the opportunity of AI seriously. It's a great starting point. Obviously, 500 million is not a lot in comparison to some of the numbers that you see thrown around, particularly in the US. But it's a great starting point. It's a great sign of intent. And yeah, been kind of working with them a little bit, and hopefully we'll be able to find some areas of overlap and work with them a bit more closely.
Right. And when we think about supporting AI, AI infrastructure and also advanced materials, Has that been a new focus over the last 18 to 24 months, or has that been a longer thesis?
So I don't necessarily think it's been a new focus. I think it's probably, just across the market more broadly, I think has taken on a much kind of stronger resonance with investors, with legislators, with politicians. So it is just taking up a lot more of the sort of the bandwidth these days.
Yeah.
But yeah, it's something that we've looked at for a while. We've got investments in some kind of earlier iterations of some of the stuff that we're seeing now, which is something that we've looked at for a while.
And has the recent market environment changed your investment philosophy at all, or has it just solidified it?
Yeah, I think it's definitely solidified it, and I think the big learning, or one of the big realizations for me over the last 18, 24 months is the benefits of kind of long-term flexible partners, and frankly the benefit of working for a company or a fund with that structure, in the sense that being able to take kind of long-term bets and invest kind of through the cycle is super important. I mean, you talk to investors with a great deal more experience than I have, people who've been through the dot-com bubble, etc., and kind of venture's always been high P. It does feel as though, talking to those people, that we are in a particularly sort of pendulum-like environment at the moment. So being able to kind of stay the course and kind of invest through that cycle, I think is really beneficial. So I think that's.
How do you stay disciplined during peak hype cycle?
Well, the investment committee is always helpful for that.
Cooler heads.
Yeah, exactly. No, I think the discipline question is a really important one, and I think there's a huge amount of nuance around it as well, because I think you can look at certain things and kind of you can maybe make the assumption that discipline has been lost, but then on the other side of that same coin, I'm definitely a proponent of, if you're trying to invest in a high quality asset, which happens to be expensive, if the fundamental risk reward still stacks up, you shouldn't necessarily be afraid of doing so. And I think that's definitely something which is a tricky debate to be had, but the discipline really comes from making sure that you've got really strong, sort of, for us anyway, internal processes with lots of debate and lots of people who will feel free to challenge and kind of support in thinking through investment theses and that type of stuff. So it's a challenge, but it's a fun one.
And so, being surrounded by all these other great investors here at BGF, is there one belief you had earlier on in your career that you now think is completely wrong after your experience in VC so far?
Yeah, I would say maybe it's not so much a sort of strong belief, or maybe more of a mentality, I suppose. And I think that is around that sort of fear of failure, right? I think when you first start investing and allocating pretty large sums of money to things, you sort of have this sort of fear of failure, and it's something which I think is kind of subconscious across a lot of the ecosystem, and is, to be fair, one of the few criticisms of the European VC ecosystem that I sort of do buy into. This idea that kind of failure is terrible. I really don't think it necessarily is. If you've done everything you can to succeed, ultimately the biggest bets, the biggest and strongest outcomes, they're incredibly risky, right? And you need to be accepting of failure to be able to put yourself in that position to do something kind of genuinely game changing. So I'd say that's probably the biggest one. And I think tricky when you're sort of early in your investing career, right? Because the lemons always ripen first. So the bad ones go bad, and you haven't quite worked out which ones the good ones are yet. So it takes a bit of time to kind of work through that, which is always requires a bit of soul searching.
Right. And so when you do take the risk, let's say it's something completely new that you're investing in, how do you agree to that amongst the rest of the folks at BGF?
Yeah, I think conviction is super important. So if you've got really high conviction in something which looks very high risk, but you've fundamentally done the work to be able to kind of substantiate and back that conviction, then that carries a huge amount of weight. And we're lucky with the sort of the environment that we work in the sense that there's a lot of trust in each individual investor to have gone and done that work, so that when that conviction comes through in conversation, it does actually carry weight.
And so let's say we're thinking about a new conviction. What do you think kind of the new thing will be? We're talking the next AI, let's say in 5-10 years time. What do you think it's going to be?
Yeah, I think if you're looking at sort of broad category defining things,
bold bets.
Bold bets, yeah. I think quantum is probably right up there from kind of two perspectives. I think one is, obviously a lot of investors who maybe have missed out on that sort of early ramp up in AI looking for the next thing, and it's quite a nice sort of analog, I guess, in terms of the next sort of phase of compute. But also I think there's some genuinely really interesting aspects around kind of using quantum technologies to almost address some of the challenges which AI has created, particularly around things like cyber, for example. Some really interesting kind of opportunities. And I think clearly there's been some really big bets in the sort of fundamental kind of compute architecture for quantum, but there's some really interesting areas that are sort of AI adjacent, quantum adjacent, cyber security adjacent, which I think are kind of just going to increasingly gain momentum and gain traction.
Right. And so where are you seeing kind of the most fertile ground across the UK and Ireland for these kind of deep tech companies who are bringing that new thing to the market?
Yeah, I think the UK and Ireland is incredibly lucky with the strengths of the research institutions that we've got. We certainly see a lot out of university spinouts, and you see some of the data in terms of kind of the success rates of those UK spinouts, and I suppose the volume of deals that come out of the university relative to other areas. It's definitely sort of a fertile kind of hunting ground, and making sure you've got strong relationships there is definitely kind of top of the priority list for us.
So there's only so many top institutions for these university spinouts to come from. How do you compete and win these deals versus other deep tech investors? Yeah,
I think the question is essentially about sourcing and origination, right? And I think the key really is, the best deals are typically relationship based. So making sure that you've got a strong relationship with the institutions themselves. So you're kind of front of mind when they're recommending people to talk to, investors who might have gone earlier than us as well, and also the founders themselves, right? I mean, as I said, we're predominantly a Series A investor, but often our most successful investments will have started that relationship with the founders at pre-seed, seed, and kind of regularly worked with them to help shape the narrative ahead of Series A, keep in touch, and from a sort of getting access ahead of others, that's a great way to sort of preempt around, right? If you're having that visibility before it comes around. So I say that's definitely part one, and I say part two is, I suppose trying to leverage the sort of the volume of deals, frankly, that we have done. I'd say we're probably one of the most active deep tech investors across the UK and Ireland, and when you've got that sort of presence in the market, then you do end up getting quite a lot of inbound as well. So certainly see the benefits of that, which is great.
Right. So being a name in the market is really important. Could you give us some examples of some of the companies you've invested in?
Yeah, sure. So companies we've invested in, so particularly kind of university spin-out ones, right? So Echion Technologies out of Cambridge, building niobium-based anode materials for batteries. Very interesting. So another one, battery related as well, is Gaussian. So University College London Spinouts, which has developed a technology where they use effectively variable magnetic fields, apply that to a battery whilst it's discharging, and it has incredible impacts on lifespan, charge rates, like 2-3x improvements on both, which is kind of genuinely game changing, which is really exciting. Similarly, on the sort of maybe a shout out for some of my life sciences colleagues, we backed, we're the largest investor in OrganOx, which is a med tech company out of Oxford, which we backed kind of, I think first investment was maybe 2018, 2019. We backed that all the way through to exit last year, and they sort of exited for, I think it was about $1.5 billion in the end, US dollars, which was a great result and a really good example of UK university technology kind of spinning out, commercializing, scaling up, and ultimately kind of breaking into kind of global markets. And yeah, so ended up exiting for $1.5 billion, and BGF made £175 million on about 35 million capital deployed, which is a good result.
Excellent result, especially given the time span. When we're thinking about the teams you back, what makes a must-back team for you?
Yeah, so I suppose it's probably two or three things. So firstly, and fundamentally, kind of founder market fit. And by that I really mean someone who has a sort of a really deep understanding of the market they're selling into, but most importantly, the problem that they're trying to address, and then the value in why solving that problem is really important and fundamentally really valuable. So it's, you obviously have to have a really deep understanding of the science, so the chemistry, the physics, the engineering, whatever it is, but also really deep understanding of the value chains, the incentives within that, things like procurement, friction, and all those good things that kind of make or break businesses. So I'd say founder market fit, definitely one. An ability to kind of convert really complex technology into something which is kind of commercially accessible. And I mean that in two ways. So one is explaining it. It sort of goes to that problem solution piece. If you can explain that really well, then you should hopefully be onto a winner. And secondly, it's the actual kind of commercialization of that technology. So kind of being able to shift from an R&D tech first mindset towards something which is much more commercial, much more problem oriented. And then the third one I'd say is a sort of combination of self-awareness, understanding kind of where you're strong, where you're weaker, and then a sort of an intellectual curiosity and a desire to, I suppose, have a growth mindset and surround yourself with people who are more experienced, know more than you in certain areas, and really kind of learn from that. So I suppose it's that sort of low ego, high ambition, high growth mentality type mindset. So I'd say those are the three things that we're definitely looking for.
So what founder traits do you think are overrated in venture folklore, and why?
Yeah, so I think the one that jumps out to me is that sort of stubbornness, like extreme stubbornness, where setting out on day one with an idea and it's sort of my way or the highway, everyone else is wrong. It's this will work for X, Y, or Z. You definitely need to have that to a degree, otherwise you would never start a business. But I suppose it's really sort of matching that very high ambition and that kind of certainty that there's a problem that you can address with that sort of kind of mindset of wanting to grow and understand and accept challenge and debate from people around you, whether that's market participants or people who are working within the company or investors or board advisors, whatever it is. Surrounding yourself with people who are in a position to challenge you, accepting that and reveling in that, I think is a much more powerful founder trait than that sort of hardcore stubbornness.
Right. So I think coachability comes to mind when thinking about this type of founder trait.
Yeah, it's a sort of coachability, but whilst maintaining high conviction in what you're doing. So it's sort of not being told what to do and accepting it as fact. It's accepting advice, processing it, and trying to work out whether that's advice that you should or shouldn't take. And there are some scenarios where you should take it.
When we think about deep tech startups in particular, the size and pricing of rounds can vary significantly. How do you size and price a round in, let's say, something like chips or AI hardware? How do you do that as an investor?
Yeah, so there's no formula, unfortunately, but I'd say it's a sort of triangulation between what is that fundamental market opportunity, what is the potential reward, so kind of how valuable could the business ultimately be by solving the problems that it's setting out to solve, and then what's the risk in getting there. And I suppose that risk piece is obviously where you spend a huge amount of diligence, and it's really fundamentally about the validation that the company has sort of delivered to date. And really that validation needs to span both the tech side, so how well proven is the technology from a sort of fundamental science perspective, but also kind of how manufacturable, how scalable is that technology. And then it's also on the commercial side, right? So how much validation have they got that the market really needs this solution and is willing to pay for it? So if you can sort of, have quite a lot of evidence to support those two things whilst having a very large market opportunity and an interesting sort of exit potential, then that's fundamentally going to drive up your valuation. And I would say that's largely applicable across the round sizes and stages of development that we're looking at.
Right. And so when we think about the probability and the validation side of things,
Yep.
what are the kind of steps to get, closer to the promised land of, very high probability and very well validated? How do you, first of all, validate these investments and then decide what the probability is of success?
Yeah, I mean, I think it's definitely a lot of art. There's some, obviously taking scientific principles into it and trying to be as sort of data driven and oriented as you possibly can. But ultimately, as an investor, you sort of you live and die on the judgment calls that you make, right? And it's trying to put yourself in the best possible position to make the best possible judgments is sort of the way that I'm thinking about it. And one of the things that I've certainly learned over the last few years is there's no such thing as a perfect deal. There's always going to be something which doesn't quite stack up in the way that you want to, and really it then comes down to, am I prepared to take that risk on for what could potentially kind of occur from a reward perspective? So the way that we go about it is relatively systematic in terms of we're going to spend a lot of time with the CEO, the founder, really getting under the skin of the technology, their understanding of the problem set that they're looking to address and what that value proposition looks like. We'll then spend time with the tech team, going 2, 3, 4 layers below the hood on the technology itself, where it sort of goes beyond our sort of realms of expertise. We'll bring in some experts to provide some views on the fundamental technology. We're always going to want to speak to customers that you're engaged with, and sort of customers, partners, market participants who will be able to help validate some of that commercial side of things. We're not going to go into an investment and say you have to have a certain level of revenue or a pipeline of a certain size. We're going to make sort of judgment calls on that, but really being able to kind of demonstrate momentum with market participants and people who are fundamentally prepared to pay for your solution is sort of what we're looking for.
Right. And are there specific moments on, let's say, the development or commercialization roadmap that you kind of look for, which you say, okay, we've hit this hurdle, they deserve a higher valuation? Are there moments like that?
There certainly are, sort of more broadly across, I suppose, that deep tech fundraising journey. And I think this is something that's super important for deep tech founders to kind of understand, and deep tech investors as well, kind of more broadly, is valuation within deep tech is sort of pinned to inflection points. So it's not a sort of, I suppose it's not sort of like an escalator that just goes up and to the right. It's much more of a step change based on exactly the points we've been talking about around the tech validation and the commercial validation. So things that really move the needle, like getting a technology into a customer's hands that they've deployed in a commercially relevant environment, is a huge kind of marker of success. So that's definitely a big one that we'd look for. Similarly, kind of long-term sort of commercial engagements is again something that's really important. So if you're looking at something that's sort of maybe more on the sort of the manufacturing side, so something that looks similar to an offtake agreement, for example, is going to be something that we would look for as a real marker of that sort of value inflection point.
Right. And so for something that hasn't really been created yet, let's say quantum, how would you go about looking at those kind of rounds?
Yeah, I mean, that's definitely a lot more difficult. And I think that's where you're really looking at sort of triangulating more around that sort of market opportunity. What is the potential opportunity for this technology? And the market doesn't exist yet, right, in many ways. So you are sort of having to go out on a bit more of a limb. And the best founders within that space will be able to very clearly articulate, our solution is doing X, Y, or Z. This will solve these problems, which is commercially valuable to these types of customers. It might not necessarily exist today, but the best founders will be able to explain and really get you to buy into that story. And then the other side of it is then, again, it's trying to understand, does the fundamental technology work? Does the physics work? And if you can kind of get comfortable with those two things, then I think that's really where you're going to sort of look at your higher valuations. And I suppose the third thing, which definitely plays a role, is quality of the team. Stronger teams who are well-rounded, complementary skill sets, experience, have gone through the journey before, have evidenced ability to raise money, exit businesses. They're generally going to command a premium as well.
Right. So when we see the blockbuster AI frontier lab, fundraisers recently, it's mainly because of the team, right?
Yeah, there's definitely going to have a very high level of conviction in the team.
Looking at companies that you have invested in, you mentioned a lot about partnering with companies for the long term. What does that actually mean? Like, what kind of work do you do with your companies to make sure that they succeed beyond your investment?
Yeah, so fundamentally it's about being proactive. So the way that we will partner with companies, portfolio companies, is we'll typically take a board seat. So we'll be an active board member, and we will look to really leverage the sort of the breadth and depth of the BGF offering. I think one of the really nice things about being the venture capital arm of a private equity platform is we get to benefit from all the hard work that platform has done over the years in building a really nice offering to support with the scale up of businesses, right? So things like building or augmenting sales functions, finance functions, HR, ops. We've got a whole roster of people that we're able to call on to provide advice across things like fundraising strategy, IP strategy, pricing strategy, kind of how do you capture that value as you sort of build out, go to market. All these things are sort of areas that we're able to kind of tap into. And I suppose by being a director on companies, being taking that partner first mentality, we're looking to kind of proactively tap into that and make sure that the companies kind of can take advantage of that as and when they want to. And I'd say the other piece as well is, we are a large organization with a large portfolio. So, the learnings across that portfolio are enormous. And so, building that community of founders, of fellow CEOs, fellow chairs, fellow, CFOs, CTOs, whatever it is, having a network of people that you can kind of tap into to sense check things is really interesting. And then, if there's areas of collaboration that come out of that as well, then fantastic.
When you think about the next decade, what's your biggest conviction and your biggest fear?
Biggest conviction, I would say, is I think deep tech is very much having its moment again. So, I think if you pick any megatrend now, whether it's AI, energy transition, space tech, defense, all these sort of big megatrends, health, they're all trends that fundamentally require significant advancements in technology and hardware. So I think kind of deep tech is here to stay, which is great. So yeah, definitely kind of long-term opportunities within the deep tech space, which is really exciting. Yeah. Fear, I would say, obviously there's a lot of uncertainty kind of at the moment across the pace of development in AI, some of the geopolitical kind of events which are sort of going on, and kind of long-term trends as well. It's a bit of a fool's errand of trying to predict where any of this is going to sort of land up. But I think there are clearly opportunities to be had within that disruption, which is exciting. I suppose the fear is that, as a European tech ecosystem, as a UK and Ireland tech ecosystem, we don't necessarily take advantage of that. It does feel like there is a big kind of global dislocation in things, and if you kind of don't take advantage of that, then there's a risk of being sort of second, third in the race and beholden to other markets, other countries, other technologies. Whereas right now is a really actually exciting opportunity for the UK, Ireland, Europe more broadly to kind of develop the next set of kind of leading tech companies.
It's definitely time for Europe to take the initiative.
Yeah, exactly. Yeah.
So given you're sitting on the investor side of the fence, what advice would you give to founders about, A, building their company, and B, raising capital?
I think the piece of advice that I often give, and people might be a bit bored of hearing about it, is to think long term about your fundraising strategy and tying that to your company building strategy. Deep tech it's really difficult to build a hardware business, and the levels of funding required vary hugely, but are often pretty significant. So the fundamental piece of advice that I would always give is kind of, where do you want this business to get to, and sort of work backwards from there. The funding journey and kind of going up through those rounds is fundamentally a journey of sort of risk transition. So transitioning risk away from technology into sort of more market focused risk, into kind of scalability risk and execution risk. And it's sort of working through that sort of risk allocation, mitigating the tech risk very early, mitigating that commercial risk as early as you can, mitigating the scale up risk as you sort of go along. And each round will attract different styles of investors who will look for different, markers of success, different markers of risk mitigation, and fundamentally they're underwriting different kind of risk reward profiles. So it's really thinking about it from that perspective. So if I want to get to Series C, what do I need to have proven? So therefore, what do I need to raise in Series B to get to that point? And kind of you can work your way backwards. So obviously a lot of speculation, a lot of theory involved in that, but I think it's a really, really helpful exercise.
And what advice would you give to aspiring VCs?
I would say the best education is doing deals, being involved with companies, being exposed to as much as you possibly can. So, if you're a junior within the space or you're wanting to get into the space, kind of just being super greedy about getting access to deals, getting access to companies, getting access to sort of the portfolio management piece. I think it's, just getting involved with as much as you possibly can, I think would be my number one piece of advice.
Who is Rowan Bird outside of VC?
An aspiringly average marathon runner.
How average are we talking?
Well, these things are always relative, right? I've got mates who run marathons in 2:30, 2:40.
Wow.
I was very happy to get around in 3:27.
It's amazing. Well done.
Which, feels like an elephant in comparison to those guys. But I do enjoy it. Outside of kind of running and being bad at golf, also, quite like to learn things. So kind of terrible vibe coder and very average French speaker as well.
And how do you balance kind of the work-life aspect of things?
It's difficult because things kind of crop up when they crop up. I think the really fortunate thing about being in VC is it's just fundamentally super interesting. So not too much of a challenge if you kind of enjoy dealing with those challenges. But I think kind of carving out time, making time for outside activities is definitely important. Having a really good group of friends around you is important, and always a good way to keep yourself grounded as well.
Definitely, and especially here in the UK.
Yeah, exactly. Yeah, they're not afraid to keep you grounded.
Definitely not. Same in Ireland.
Yeah.
In a parallel universe where you weren't a VC, what would you be and why?
When I was at school, I did quite a lot of cricket coaching and did some sort of volunteering with schools and stuff, and quite enjoyed the buzz of like helping people get better at stuff. So You know, a teacher would be quite fun, I suppose, although very challenging. So yeah, maybe something along those lines.
What book would you recommend if you could only recommend one?
Only one, wow. I'm going to cheat. I'm going to offer two though. So one generic book that I would recommend would be Range.
What's it about?
So it's an argument against hyper specialization. And it's a fascinating book, and it's effectively sort of outlining the benefits of having a very diverse background and applying that to whatever you do today. So drawing on different experiences helps you come at problems from lots of different angles, which hopefully results in a better solution. The book's really interesting. It talks about, you know, sports stars who come from diverse, in terms of sportingly diverse backgrounds. So like Roger Federer, for example, played lots of different sports. Obviously comparing and contrasting that with Tiger Woods, who only played golf, is sort of an interesting one. But then, you know, they talk about some really interesting things around the 3M challenge, which I actually don't know if it still exists, but was a challenge that, so for some really difficult problems that their scientists couldn't solve, they would have this 3M challenge and put it out to the public. And, you know, people from like English teachers, for example, would solve these scientific problems and they'd get a reward for it, sort of thing. So really interesting. And I think quite applicable in the world that we live in today, right? Where, you know, AI is a source of hyper specialized knowledge. If you really want to go deep on something, you sort of have that access at your fingertips. So just an interesting thing to kind of think through in terms of how the next few years unfold. So that would be the generic one. The cheat would be for people wanting to understand VC. The Power Law by 𝐸𝐴𝐻𝐸 is really interesting from the perspective of just giving you an understanding of the history and the different approaches to it over the years.
Do you think that the Power Law is fundamentally a good thing for early stage investing, or do you think it's a bit overrated?
I think for early stage investing, I think it is important, frankly. I think going back to one of the topics we touched on earlier in the conversation, you know, acceptance of failure means that things are going to fail and you're going to lose a bunch of money on some things, which means that the ones that you do back do need to, you know, return enough to cover for all of that. And I think you see that in the data that's out there, right, in terms of the most successful funds, and, you know, how much of that fund was returned by 1, 2, 3 assets. So, you know, there's sort of evidence to support it. I think it's interesting to think through kind of how extreme you need that to be, and how, you know, the extreme level that you're underwriting. I don't necessarily think you need to go that far.
Well, Rowan, thank you so much for taking the time today. It's been a pleasure having you on the show.
Yeah, thanks for having me.
Yeah, wishing you and BGF all the best.
Yeah, cheers, Tom.
I have a quick favor to ask you. Raising Europe is a community-supported channel. If you find that our content has been valuable to you or has helped you in any way, please hit the subscribe button. It's one quick, free, easy way for you to support the channel and help us make our production better each and every week. Thank you so much for joining us on our journey so far. Without you, none of this would be possible.